Good morning. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Thank you, Chef. It says nice spreadsheet. Right on. Yeah, I didn't mean to have that up there, but all right. Good morning. So, got my nice shirt on for you. Got my cufflinks on for you. Second day in a row, actually. I don't know if you noticed that yesterday, but anyways, I'm doing my best to look good for you because you're my sweet baby. I wonder if I can adjust this a little bit. Yeah, I guess that's fine. So, hey, welcome to Forex.Today, community of 14,000 foreign exchange traders that love trading foreign exchange. We call it Forex, though. It's easier to say Forex. We like to trade the Great British Pound, the European Euro, the American Dollar, the Australian Dollar, the Canadian Dollar. What else do we trade? Bitcoin, oil. Yeah, this is my COVID. This is still my COVID haircut. My COVID cut. Hey, I wear it proud. Like I said, my son's like, "There's no way, Mom. Get away from me. There's no way you're gonna cut my hair." And I'm like, "What's wrong, son? You don't trust your mother? I trust your mother. I love your mother. I trust her. She can cut my hair." Yeah. Cool. So, anyways, yeah. So Bitcoin, oil. In fact, we're going to start with oil, and we can do gold and all that kind of stuff. Silver, peso, rand, gold, silver, no, gold probably, peso, yeah. Yeah, it's mid-month, really, so it's not really a peso time for me, but that's fine. Rand, okay. Sure, whatever. So I'll do all of that. No cost of any money, but you do have a cost. There is an obligation that you visit tradersway.com, the sponsor of our community, and you, just out of loyalty, I suppose, you visit tradersway.com, you open up a demo account, and once you're in the back office, then you can feel free to download CTrader, MT4, MT5. You can have a fixed account, variable account, ECN account, whatever. But the thing is, you need to give them the opportunity to earn your loyalty and respect. That's all they're asking for. They support our community, so they have an opportunity to earn your loyalty and respect. So please do that. The background is too dark. I just have my screens turned off. I've been working on cap tables day and night, so I got like 5 spreadsheets open. But anyways, let's get on with it. Okay, look what's happened on oil the last 24 hours. Boy. Amazing stuff. Holy moly. Let's see. I'm going to have the microphone here. Let's see if that is okay. Oh, you are a scalper? No, not really. I can, of course. Not really. So let's go out. I just want to show you that basically in that range, nothing's happened. And this is what we did yesterday. I put a top on here, a bottom on here. And that's that. Okay. Yeah, FT9. Well, then take the training courses. The link is in the description below. Still 80% off. So behind on doing stuff. So anyway, so you could use this sort of a canary in a coal mine idea of, you know, where is global macro going right now? This is one way of doing it. Is there a group or something? Yeah, you know, once you joined, it said, hey, do you want to join our live trading group? That's one way of joining. The second one is at the top of the drop-down menu. There's a button that says join our live trading group. And then at the bottom of all the videos under all the courses, the last one is the live trading group, and you'll notice that it's locked when you try to enter. And then it's hard to see, but there's a little link that says join, and you click that. So there's 3 ways to join the live group, Jordan. So anyways, this tells me going nowhere fast. So extra money? Yeah, but it's not a lot of money. Yeah, courses are courses, live training's live training. But you can't come into the live training until you've done the courses because you won't know anything. So it would slow everybody down. All right, cool. So gold, what do you want to do here? Well, we've now bottomed out. It's not a proper price action play, but it's definitely a sign of consolidation. So you should adjust. Okay. Oh my God, there's silver on here. Ha! There you go. Brad asked for silver. I never cover silver. I'm like, wait, that's silver. How'd you do that, Brad? That's crazy. Okay. Let me summarize what you're supposed to do this week. Buy, exit. There you go. Just covered it. Yeah, you're very impressive, Brett. I don't know how you do that. So anyways, it's done. Done, 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 done. Exit. Dun, 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 dun. Exit. So anyways, it could go a little higher, but nobody cares about could. Right? Plan big, expect small. So you bought it at 18, you're out at 19. Yeah, nice. Cool. Bitty, bitty, can't you see? Sometimes your moves just hypnotize me. And I just love your blockchain ways. Options traders are broke, but you're so paid. Last Samurai says, took out the weekly doji so it could go higher. I'm not interested in that. That's totally irrelevant to me. So first of all, it's weekly, so it doesn't incorporate any fundamentals. And everything I do is based on fundamentals. So you're like, there's a weekly doji? Huh. But I'm much more interested in the 1 hour and the 4 hour than the weekly. And the longer term stuff comes from fundamental trends. So the weekly doji just tells me it's summertime. Doesn't tell me anything, except it didn't go up and didn't go down. Okay? So I'm not slamming you, I'm just slamming the idea that you're way out on a weekly doji. It just tells me it's July. Honestly, that's all it tells me. Weekly, it's July. Has no other bearing than that, right? Yeah. Yeah, you don't buy tops. That's good. Cool. So look at this. Look, a doji. Guess what do I have to do? A weekly? Get it to doji. You know, I don't know. I guess I don't even know. It's a monthly doji, but yeah, like if you're gonna go long term, man. All right. So some of you guys are like, Bitcoin's going to 20,000, eh? Okay, that's really cool. You could certainly think about that. Okay, we were down here. I'm sure you bought the double bottom. Okay, then we are in here, very supportive, and now on the monthly. This is monthly. Okay, higher high, higher low, higher high, higher low. Okay, and this is just the beginning of a new month. So based on what's going on here, a bull is expecting a higher high, and then August a higher low, then September a higher high. I just planned out till September. How easy is that? Why do you make it too complicated? Why make it so complicated? Why do you do that? Last Samurai says, yeah, it looks of course it is. Of course it is. That's the funniest thing, right? Like, it's challenging, right? This is like, I don't simplify and say, look, you can't do this, so you're stupid. That's not the message. As you work towards genius in foreign exchange trading, you will go from a process of adding more layers and adding more layers and 19 different levels of confirmation, because your first step was try a bunch of things, lose a bunch of money, do a bunch of tweaks, lose a bunch of money, tweak a whole bunch of other things, lose a bunch of money, and then you're like, whoa, 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 whoa. Okay, I need 19 levels of confirmation before I ever pull the trigger. And then you get caught in this conundrum of every trade I make has to be a perfect trade, right? Okay, well, every trade you take, you should expect to be perfect on, but whatever. And then you add your layers of protection, because you remember how painful it was of losing and losing and losing and losing and trying something new and trying something new and trying something new. And you're like, well, son of a gun, I never get the results I want. So once you start settling down, then you find not just 19 ways to confirm, but probably 25 ways to not actually trade. And you're like, wow, I'm doing so much better, I'm not losing any money. Yeah, well, you're not trading, so... Right? Okay. And then, so then you start to find things that work, and then you start to try to be consistent. And then you're so focused on the rules of engagement, the rules of engagement, rules of engagement. But what I'm trying to say is, as you develop skills, and you do need to have the scar tissue for some reason, it's part of the human condition. But at some point, I want you to take like your brilliant qualities as a currency trader and become the sort of a genius, the enlightened. And what does the enlightened do? What can the enlightened person do? Not make it complicated. They filter things out. They filter out the noise. They filter out the fear. They filter out the greed. They filter out all this stuff that we're hit with from all angles. And they say, oh, I have a theory what's going to happen the next 90 days. And they're done. You're like, son of a biatch, this guy just planned the next 3 months in about 19 seconds. Yeah, that's right. Yep. Okay? Now realize that we don't know the future, so it's not like a crystal ball. But here's what you can do with this. If you believe this is true, because it would be like you might have a plan like this, then you can identify key levels of support and resistance over the next 90 days in which you may want to buy, take profit, buy again. Right? Well, Cave, I don't want you to follow me. That's the whole idea. If you've been, no, it's funny, I've been doing this for almost 20 years, but if you listen to the messages I gave 20 years ago, I want to teach traders how to be independent. I really don't want you to follow me. I want you to work for me. That would be most ideal. I want you to be on my team. I want to share success with you. I dream, and I'm not joking about this, right? But I dream of taking over a beautiful, awesome space somewhere that's just amazing. You just love being in the space. And we have a trading floor, and we have camaraderie, and we have parties. Like a friend of mine, once a year he does something called Awesome Fest, and he takes all his employees and a whole bunch of awesome, interesting people from all different walks of life and industries that are very successful, and they go somewhere like a big beach in Malaysia, and there's like, let's say 300 of them, and they sit for 3 or 4 days. You know, successful artists, successful authors, successful athletes, successful business people, successful political leaders or community leaders, right? And they all just get together on a beach in Malaysia for a week, and they just sit around and they talk. Now, formal discussions. And I'm like, son of a biatch. Vision, that's what I want to do. Right? That's what I want to do, man. That's exactly what I want to do, but I want to do it with you. And you're making tons of money working for me, and you're making me tons of money. And you're making my client tons of money. We're all making tons of money, and we're not interested in money. It's not about the money, but the thing is, all that goes away. And now we're very interested in how much we can make life interesting. And that's what I'm saying. Like, I would love to have a Navy SEAL come in and talk about fear. I'd love to have an athlete talk about discipline and training. I'd love to bring in, you know, people from all different walks of life that can talk to us about similar aspects of what we face every day, but share us how they face it may be completely different. Okay? Yeah, but like we're still dealing with like, you know, the market does this for 3 weeks and you lose a bunch of money. What the hell? Right? Whoever that came in the other day, he's going to regret it. But whoever came in the other day like Euro USD is a nightmare. What the hell do you mean Euro USD is a nightmare? Like, oh my God, nothing's happened. And if you were a bull, you'd only buy at the bottom. And if you're a bear, you'd only sell the top. Like, how could that be a nightmare? After doing this for 20 years, like, I don't understand, like, what's going on? Why would that be a nightmare? Right? Yeah. Oh, and by the way, the other thing I forgot to mention, awesome food. Awesome food. I'm just going to shower you with awesome food. Wherever we go, it's going to be awesome food, right? That's right, Peter. That's enough. That's enough. I used to charge 300. No. Okay. So you'll meet with me in that live trading group every Thursday. So the live trading group is going to meet with me tonight. Okay? So right now it's weekly. Okay. So anyways, yeah, I want you to stay involved, but in a completely different way. Yeah, commodities. No wonder I did this. You know what? That's what I did, Brad. I clicked on commodities instead of market. How interesting. So anyways, good. My oh my WTI, you might, right? Cool. Well, let's do Natty. Look at Natty climbing, huh? You probably have the version with no MACD on it, FT9, but you can add it. Okay? You can add it. Of course, I can just teach you how to calculate it with your mind. So, Jean Guy, you're going to need a hat if we go to a beach in Malaysia for a week. I don't want to go to Bali though. Too many tourists. I feel bad about Bali too. In my ecotourism class, I learned that Bali has run out of water. Like there is no water in the underground tables that used to be there. So you're in a rainforest, and tourists suck more water out of the ground than God puts onto the land. And you're like, that's a problem. Yeah, too many drunk Aussies. Absolutely right. So, oh yeah, Turkey. I would love to do something in Turkey. Oh my God. Absolutely, for sure, we're going to do something in Turkey. So anyways. Cool. So let's move on. We'll scan some pivots. Okay. But anyways, guys, it will take you, once you get going, once you learn Forex, and I teach you how to trade, and you go through the live group and all that kind of stuff, you're going to need 5 years before you get anywhere serious with me. That means once you know how to trade, it's probably going to take you 5 years, because I can't convince a client to give you money if you don't have 3 to 5 years of a track record of success. Just like, I mean, you still have to own it. You still have to have skill. You still have to have patience and discipline. If I gave you $1 million and you went from a $5,000 account to $1 million account, you'd have just a total emotional meltdown with somebody else's money. And then, of course, I get buried in the sand somewhere between Abu Dhabi and Dubai, and all because you weren't ready. So it's still going to take 3 to 5 years for sure. Once you're good, it's going to take 3 to 5 years before I can give you serious money. But I can help you get serious money. And that's sort of the gap. Okay? Okay? Still killing it. Yeah. That's a good trade. Anyways, let's do this one. This is our Kiwi. Here's our plan. Really boring. Out of position trade this week. Really, okay, fine. Sort of, we're hitting the conservative target, which is, it's a combination of pivot and top. What do I have on this now? So I'm up to now 225 pips. Okay. Okay, not bad for, what, 8 minutes worth of work? Okay. So yesterday we talked about trying to make a decision on how to handle the risk on that. Do I move my stop? Do I not? Am I income focused? Am I asset appreciation focused? How many people found that helpful in some weird way? The difference between capital appreciation and essentially, income. Right? Yeah? Because, when you look at a balance sheet, you have assets, and then you're going to have like income, basically. Well, one's an income statement, one's a balance sheet. I get it. But, I guess what you're doing, if you're thinking about income, you're taking short-term investments. And by short-term, I mean like 2 hours, right? So let's say if you were doing this on a daily basis, it's not that, right, your cash reserves at the end of the day. So it would be balance sheet in that focus, right? Where at the end of the day, so you have your balance sheet, and you have assets, liability, and then you have your capital, right? And some people are focused on growing your assets. This would be, like your positions. And then the other one, you're focusing on cash. Right? And so this would be sort of day trading, and this would be swing trading. And they're both correct. You're just focusing on a different line item on your balance sheet. Okay? You're choosing income over appreciation. which is actually, so, this is all business. This is one of the things I'm trying to tell you a lot. I don't know if I have any other spreadsheets open. Okay, no, that's for a startup. Hang on. I thought I had another one open here. Cap table, cap. Really? I don't have any others open? Shoot, I thought I had I have so many spreadsheets open. No, I don't have any more. I'm actually a little surprised by that. Anyways, what I was trying to show you is I'm working on, I'm analyzing various real estate transactions. And you look at it, you have to look at it like an investor is what I'm trying to get to. Like someone has to look at what you're doing, which is your behavior in your financial market. Someone has to look at your behavior. And very often they look at it through the lens of an Excel spreadsheet. And you have to talk money, like so they can understand dollar for dollar, risk and reward, whether they give you money or they put it in the real estate. And so there's real estate where you're calculating your income, you're trying to calculate your expenses, and then you're trying to calculate the cost of borrowing the money, right? And then you have to do very, very detailed analysis on getting your property stabilized and those costs and how, and there's multi-steps, right? And at the end of the day, it comes down to an Excel spreadsheet of cash flows over time. And sort of part of that cash flow might be some part of your asset appreciation as well, right? And what you're trying to, so they're going to look at a real estate transaction. I'm surprised I don't have anything up right at the moment. I just have all the startup stuff. By the way, right? Term sheets for venture capital for a startup from a VC. That would drive an entrepreneur wild. But anyways, at the end of the day, this is all about cash flow, risk and cash flow. And that's what you're competing against. You're not competing against another Forex trader because they don't know any other Forex traders. And I don't think anyone walks around like, hey man, I really need a Forex trader to manage my money for me. Very rarely, unless you're talking to a CFO for a corporation, but you're not ready for that either, right? So no one's walking around like, man, I want to put a whole bunch of my life savings into a Forex trader. Do you happen to know a Forex trader? I'm interviewing Forex traders. No, you approach them. You're like, hey, I'm a Forex trader. You have a lot of money. Do you want to invest in me? You know what they're thinking? Well, I got another apartment building in mind. I've looked at 3 or 4 apartment buildings. I'm thinking about dumping another 15 million into an apartment building. But then you come along. Now you're like, no, this is so much better. Let me explain why, right? So that's why I want to show the cash flow. But this idea like, I'll make you really rich, which is what most people on YouTube talk about. It's like the dumbest message you could possibly have. You'll never get filthy, stinking rich with a language and an attitude like that, right? Same thing with entrepreneurs. So again, here's venture capital, right? What do most entrepreneurs want to do? They want to start a startup. Why? Because they want to raise venture capital, get millions of dollars, and they get filthy, stinking rich doing an IPO or selling out fast. Well, what happened to building a quality company, attracting customers that will actually pay you money and increase the value of your company because you have positive cash flows? What happened to that entrepreneur? Well, one out of 1,000 has a proper attitude. 999 are get-rich-quick idiots. And guess which one gets the money? The 1 out of 1,000. Right? And so as a Forex trader, you have to think that way too. Like, you are trying to build an Excel spreadsheet that can beat any other opportunity a sophisticated investor is looking at. So I have this venture capital stuff up now, so I can pull that up and say, okay, well, this rich person, right? They might put in, does this one have them? Where's my one with the convertible notes? Where are they? Okay, check this out. Okay, a rich person, 2 rich people put in $10,000 in convertible notes that convert into common shares at a discount during the Series A financing. And for that, they got 13,340 shares, or 0.06% of the company, which is now valued post money at 24 million. Okay? And now they're like, ooh, nice. So if there's an exit after further rounds, they're going to get paid handsomely. Okay? Their $10,000 is now $163,000. And you're like, wow, that's really exciting. You're going to invest by creating a convertible note and giving that to a startup that has no product, no service, but a great, interesting idea with entrepreneurs that haven't had this type of success before. And you're hoping it's going to build, they're going to be able to actually build a company, raise financing, bring in customers, raise more financing, bring more customers, raise more financing, bring more customers, and then exit by selling out to a company for $100 million. And for that, you might get 10x, right? 16x, whatever. Sounds really good. It's like 1 out of a million. Let's talk about reality now. Let's talk about what I can produce, income, not dreams, income in the foreign exchange market. But by the way, is a $5 trillion per day market. Not a dream, money changing hands every single day. So let me show you how I can gain from both capital appreciation and income in the foreign exchange market, all the while, you're 100% completely liquid. But if you want to lock up some money with a startup that has a 1 in a million chance of actually making it, and you have no chance of seeing your money for 10 years, even if it is successful, then you can go with that. But why don't we talk about sort of a sure thing, or something that at least is tangible and real. I can put 5 years of transactions in front of you and show you how it produces low volatility, low returns, not just through capital appreciation, but also through income in my multi-strategy foreign exchange firm. And oh my God, right? Oh my God. Which one are they going to take? Right? And say, by the way, you can take money out of Forex and then start funding your wild and crazy ideas with cool young entrepreneurs. Yeah. You can finance them with the profits I make in your Forex trading account. How about that? How about that? Once a year, you can pull money out of your Forex account because it's liquid, and you can go find yourself a young entrepreneur and drop 10 grand and have fun with it. It's a fun, exciting process. Let me fund that for you. Okay? Am I starting a fund? I am a fund. You know what I told my daughter? My wife's like, you need to take a nap. You look terrible. And I'm like, yeah. So my daughter's on the couch playing on her phone, and I lay down and I'm trying to sleep. And after about 8 minutes, I get back up and I said, I'm a businessman, not a zzz man. I'm a businessman, not a zzz man. So I got up. It was good. So yeah. All right, so let us be going now. Let's go over here. Okay. Now, this could be troublesome trucks. Okay. What's up, B-Dub? Murray Lines. I don't know anything about Murray Lines. B-Dub, I've been trading with these very simple, basic tools for 20 years. So that's probably longer than Murray Lines have been around. So I don't know anything. Yeah, that is Jay-Z. I'm a business. I'm not a businessman. I'm a businessman. Right? So anyways, I'm a businessman, not a man. I'm not going to sleep. So I got up, didn't sleep. Okay. Interesting, huh? So maybe some move on kitty cat, but then we need some up on oil maybe. Right on, B-Dub. So I've been doing live webinars on YouTube, just on YouTube for about 12 years. Where have you been, man? Anything you want, Gary. You're very, very welcome to join my vision. Okay. So anyways, going back to this is it. This is the thing we were talking about. I'm trying to see if we had it somewhere else though. Maybe we're on the proper chart, or maybe we were on market. I'll take a look at it. Where did we have it? Was it here? Yeah. Check that out. Huh, it's topping out. So you got to be careful. So we drew this, I don't know how many days ago. But I'm like, yeah, you got to worry about this line right here. Isn't that neat? Now, we'll delete that out. This right here on Sunday predicted this. So on Sunday, you knew, and we did talk about it probably on Monday or Tuesday when I drew this for you. And I think I did this on Tuesday as well. If you were a bull, you have to do it. Okay. Or there's this one, remember? And we had 1, 3, 6, 1 as the top. Okay. I'm sorry. It went 11 pips higher than that. I'm sorry. My bad. Sorry. It went to 72 and then dropped. Sorry. Okay. Let's go all the way back. We were here. Okay. The plan was if you were a bull, 112.50. Okay. 1. So not bad. Okay. Here's the next one. Here's the next one. So even from here, it's 100 pips. Cool. Okay. So this is approximately 100 pips. This is approximately 100 pips. Okay. The spreads, Bruce, or the yield curve? So anyways, here we are. We're right on exit. Okay. I wrote this all out. I drew it, but I didn't type it, right? And that's that. It's all definitional. It's not my opinion. So what happens next? Whatever. But if you're a bull and you're hoping for a breakout, great. But I never expect breakouts. Right? I never expect breakouts. I expect to stay in the range. So if it does break out, at least it's going in the direction I want it to. Because you guys know my long-term outlook for this is up. So if it breaks to the upside, cool. I don't have a problem with that. If she comes down back to 112, I get that. I get it. It's too early. I get it. I'm not upset by it. Certainly not a nightmare. If it comes down, I get it. Totally get it. In fact, it's pretty much expected. Okay? Which sets this up as bearish. But you already know next week is bearish, right? Watch this. Let me show you. I'll show you the shortcut. So just doing the template. Okay, watch this. Here's my bias pivots. And you say, bias pivots, right? Genie, show me the market, the weekly market for a bearish mode. And Genie does it for you and says, oh my gosh, look at that. And next, bears are selling. And they're targeting aggressively. They're targeting, I can't see that. Can you? 111.84. Oh, I don't know. I can't be too precise. 111.84. How do you like them apples? So I'm not saying that's going to happen, but if it did happen, I wouldn't be shocked. And if it started to happen, I wouldn't be long anymore. Capiche? Okay? You got to stink ahead. Cool. So that's that. And again, this is just following up stuff we did Monday and Tuesday. I know it's Thursday, but you already knew all of this on Monday and Tuesday. So now that it's happening, you need to make decisions. Okay? Are you going to buy it on this and take it back up? Or you're not going to buy it off this and take it up? See, like going over here before we leave, you don't, as a bull, let's say, if you want this to go back up and you want to trade it today, that's the only thing you have left for the day. So if it drops below that, drop the mouse and walk away. You know, that's true, Bruce Wayne, but, you know, back in 2005 and 6, when I was teaching people that, it had to do with the stock market's going to crash. Then in 2008, when was it? We got a inverted yield curve, what, 2019, maybe 2018? And they're like, inverted yield curve, the market's going to crash. I'm sure you guys read newspapers and watch talking heads on TV. And what I did here was I explained why that is not the case. That it was, right? It was pretty much a misunderstanding. And by the way, not just a misunderstanding by amateurs or a misunderstanding by, journalism majors that work for Bloomberg or CNBC. But these were professional money managers managing billions of dollars. And they're like, oh my God, inverted yield curve. That means it's going to crash. You know what it also means? That all they know is what they have learned in a textbook. And they really have no idea how the world really works. And it's pretty frightening, actually. So what I did here was I explained why the inverted yield curve this time does not mean the market's going to crash. In fact, the market went up and up and up and up. The only reason the market crashed was COVID-19. It had nothing to do with yield curve analysis back 18 months ago. So it's really mind-boggling how bad this industry is. And what that means to me is what amazing opportunity you have to be a huge success as any kind of financial manager, investor, or trader. You have the potential, the potential energy is inside of you to really not just be successful, but help people. You almost have a moral obligation to be successful here, not just in Forex, but in finance and investing and economics and all that kind of stuff, so that you can actually help people. Okay? You will make a difference in people's lives. Now, rich people, so you have to be cool with that. But hey, man, you can make a lot of money helping rich people stay rich. And then if you want to donate your proceeds to poor people, great, do what you want. You'll be funded. Start a foundation. I have a foundation. You can start a foundation. Okay? Yeah, financial advisor. The only thing is, if you work for a big firm, Brad, you're going to make what? Typically, you top end at about 350,000. So, right? Some guys, some dudes get up to 500. And then when you get beyond that, what happens is the firm pushes you out, or you go independent. And you're like, you'd make so much more money as a currency trader than being a financial advisor. If you look at like sort of the statistics, now you might know some guy who's a financial advisor and he has $3 billion, but he has a big team and stuff like that. And okay, maybe he does fly around in private jets and stuff, but it's not typical. It's like people think lawyers are rich. Most lawyers are broke. A lot of people think doctors are rich. No, they have money, but they're not rich. And plus, they give up their entire lives, so they have no time, but they have money, but they don't spend it, so whatever. I wouldn't call that rich either. You want to be wealthy, it's where you don't have to get out of bed and you're making money. Okay? So I think as a foreign exchange trader or as a portfolio manager or, that kind of thing, if you go that way, Brad, I think you'll get the same kind of interest, how you're interested in the market and in finance and such. You'll get all that same juice, but you will make more money, I think. But the thing is, Brad, so you'll be independent by then, incorporate. Yeah, but the thing is, most likely you're not going to start. It's all about track record, right? So you're like, I'm a really good foreign exchange trader. I've been, doing that for many years. And then you're like, and I've learned a lot about macroeconomics and all that kind of stuff. Will you let me manage your family's money? Will you let me manage your net worth? And they're like, no. You're like, why not? I'm so good. Do you have a history of managing family money? Right? You're going to manage my entire life savings and the money I put aside for retirement and the money I set aside for my children and future generations, and you don't have any experience. Yeah, that's right, sir. I want you to do that. I want you to give me all the money you've ever made and saved in your entire life. They're like, let me think about it. No. Okay. So usually you're going to say, well, I worked at Goldman Sachs for 10 years or I worked at Merrill Lynch, or I worked at Morgan Stanley, or I worked at a JP Morgan. But the thing is so I know lots of guys that have worked at all these firms and they top out at 300,000. And then you got to leave because you're earning enough where you should be making 500,000 or 600,000. But the way that those roles are structured at those firms, you're never going to make it. You don't make it. They take the rest, right? So they support you in the beginning when you have nothing. And then once you're bankrolled and you actually, have a book, then they kind of squeeze you out because they end up taking more at the end. Okay. And that's when you say, well, I'm taking my book and you're going somewhere else. Now, here's the next step, Brad. You don't leave that firm yet, but now you're making enough money, right? And you got a book. You got, let's say, 300 million under management. You're making $300,000 a year. You're like, but Wayne, that 1% doesn't add up. Well, you got to pay the firm and you got to pay your staff, and so you're only walking away with 300,000 with 300 million. But here's the cool thing: now you walk across the street to the other firm that does exactly the same thing, and they'll give you, let's say, they'll give you $750,000 right now to move your book in cash, paid up front. 750,000, move from Merrill Lynch to Morgan Stanley. You're like, oh, for 750,000, you bet. So you change your business card, you walk across the street, 750,000 in your pocket. Now you got to sit there. You're locked in for another 10 years, or whatever you signed your contract for. And now you've been doing this close to 15 years. And this is if you're skyrocketing in success, but usually it takes 25 years to raise 300 million. So your first step was 20 years to get to 300 million. And then you sell your book as you walk across the street, put almost $1 million in your pocket. You've been making 300,000. So now you're okay. And then you're locked in for another year. And all of a sudden you're like, you're 65 and you still haven't gone independent. And that's how it actually works. That's what they want. Or you start independent right off the bat, but now you're paying for your office, you're paying for your compliance, you're paying for your payroll, you're paying for your, I think I said compliance, but anyways, all of a sudden you start that way, and what happens is your expenses well exceed your revenues, and you're not in a nice office, and you don't have a track record, you don't have glossy brochures, you don't have fancy software, and you don't have a track record. You see what I mean, Brad? So you got to kind of play it right. So my recommendation is you never actually become a financial advisor, but get a job at Goldman Sachs for 5 years. And then you can say, well, I was on the wealth management and advisory team at Goldman Sachs, and then I decided to go pro because of blah, 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 blah. And at least you got a story out of it and a name to drop. But you never had a book because your first 5 years you're going to work for another team. Okay? The whole industry is designed so that you'll never make serious money. So you might as well be a trader. You might as well be a fund manager. Raise a fund, because it's a completely different story than you don't know me, I have no experience, but I want to manage your family's money. Like, good luck, dude. Right? How hard is it to get a Goldman? You got to be awesome. So I'll tell you, like, so Goldman is full of Harvard people, right? So I got this thing because I have a Harvard degree. I get to vote for the Board of Overseers. And I'm like, oh my God, the Board of Overseers started in 1647. And I'm like, oh, this is great, because now I know one day I can run to get on the Board of Overseers. And I'm like, that is cool. So I started reading the bios, because there's 8 people running, I think, for 5 positions. The first guy runs Samsung. He runs one of the major arms of Samsung, including their venture capital department, for like globally. I'm like, oh my God. All right, so he runs Samsung, and he wants to be on the Board of Overseers. I'm like, you know what? That's actually pretty good. And he graduated in 1989, magna cum laude, the smartest guy at Harvard. And then he has a law degree. I'm like, okay, all right, that guy's qualified. I wouldn't beat that guy. All right, what about the other person? Right? He's the president and CEO of the Federal Reserve Bank in Atlanta. He's African American, and he's openly gay. Oh my God, what a Harvard dream. Oh my God. I'm like, all right, this guy's going to win, like, hands down. He's going to be an overseer. And you go on and on and on, right? And like, what kind of person works at Goldman Sachs? It's the same kind of thing. The smartest person in the room that has done things that other people just could never achieve. That's the idea. Now, the interesting thing about Goldman Sachs Wealth Management is it's brand new. It's only like 6 years old, versus like, the wealth management team at Morgan Stanley's been around 50 years. The wealth management team at Merrill Lynch has been around 100 years, right? So that's a new move for Goldman. And so because I did a whole case study on Goldman Sachs and analyzed their whole company and broke it all down. So they have their retail banking is brand new, and their wealth management is brand new. So this is sort of a new angle for Goldman Sachs. So that might be the easiest way to get in. Okay. Okay. How hard is it to get in Wall Street? Well, okay, go to JP Morgan's trading desk on Wall Street and say, you're a Forex trader. What's the first question they're going to ask you? You walk in for a job interview to be a Forex trader. You're going to trade Hungarian francs or something. Polish zloty. They're like, right? You're going to trade Polish zloty for JP Morgan on the foreign exchange trading desk. What's the very first question they have? It's Wall Street. No one gives a crap about your degrees. If you're in management, yeah. To be on the trading desk, they don't give a crap. Show me your track record. Thank you. You need to solve that problem right off the bat. Okay? But I don't understand why you would want to work for $300,000 or $400,000 a year, making someone else millions. It just it doesn't compute for me. But maybe in the beginning, so that you can build your own successful track record, both trading and both professionally, so that you can run your own firm one day or something like that. But if you have the capacity and capability of being a good trader, then you should be a good trader. You're going to make way more money. Okay? You're going to make way more money. Okay? But the problem is, once you're done learning how to trade Forex and you're in the process of building your track record, if you're going to go out on your own, you need to know how to run a small business and raise capital. Okay? It's similar like in venture capital where like 2 or 3 engineers get together and they're like, you know what? At our job, we've noticed some interesting problems that clients are having, and I have an interesting thing that and these 3 engineers get together and they make something. They're like, all our customers are having problems. Our current company doesn't want to solve it. They just want to keep selling their product and service. So we see this problem and we've built this thing. Okay? We built this thing. And they go out on their own. And they're engineers. 1, they can't speak good. 2, they hate people. And 3, they don't know anything about business and finance and accounting. Right? And 4, they think the word sales is a bad word. So they can't sell. They don't know how to run a business or finance. They don't have the capability of actually raising money, right? And 4, they're boring, quiet, bumbling, nerdy engineers. So they're like, oh, we built this thing. It's really cool. Will you give me $100 million? So it's the same thing that entrepreneurs face, traders face, because raising a fund requires you know how to run a business, how to do finance, how to talk to people, how to do sales, how to raise money, how to kick down doors and get funded. But they're like, oh, but I don't like doing any of that. Then you're going to, keep trading your own account and slowly grow it. So if I teach you right, you can still be a huge success. It'll just take you a lot longer. Okay? Because if you want to make $100,000 a year, you probably need to be making $300,000 a year. So how much money is in your account? Right? And $100,000 a year in the United States is poverty. Homeless people probably make more than that because they don't have to pay taxes. Okay, let's do exotics. Well, the video courses, Brandon, are videos. The live group is live, and we do group work almost every week. We do group work. It's really fantastic. So it's not just listening to me babble, because I babble all the time. It's you guys working together on problems. It's really interesting. It's very, very interesting stuff. All right, let's do our trade. We're stuck in here still. Yeah, Cave. So we need to find a way to get you into that big name, right? So this is the same. Again, you guys have to understand that once you're a trader, all you have is a product or a service. So you're like a high-tech startup. So one of the things you need right off the bat is a referenceable customer. So if you have a startup idea and you created this little gadget, this little thing, this little solution to a customer problem, it would be great if you got one or two well-known names to at least beta test it. They don't even have to pay, but they're like, yeah, we like this thing, says, you know, Samsung. You're like, well, Samsung is playing around with it and using it, and they're creating, you know, a study, or someone else, and those are things that increase your value. Right? Last Samurai, are you compounding that? Remember, 6% in January will be different than the 6% in November. Right? So you have to compound it, because your account has grown in January, February, March, April, May, June, July, August, September, October, November. And so you get 6% in November, but cash-wise, right? Okay, it's closer to 100, but anyways. So the point there is 6% is ridiculous. The only way you're capturing that is because of your leverage. It's not 202%. Oh my God, no. It's closer to 100. So now you could say, well, 3% a month is, right? 3% a month is much more reasonable. Now check this out. My account only has $36,000 in it, right? 36,000. So I only have 36,000. 1% is 360, right? So 10% of 36,000 is 3,600. 1% is 360 bucks. I've made 2 trades. I've spent about 8 minutes. For the entire month of July, I spent about 8 minutes worth of work, and I'm up, what, 0.6% on 2 trades. 8 minutes. I'm up, right? Yeah, I wouldn't be shocked if I got this up to 1%. It's 2 trades. And I'm way, way, way lower leverage than you are. You are way higher leverage than me. You guys are putting much bigger. You're not doing mini lots on a $36,000 account. You're doing mini lots on a $3,000 account. So I'm taking way, 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 way less risk. And in a month where, by and large, not a lot is happening and I'm barely even working, I can get 1%. And if I tried, the 3% is very reasonable, even on a crappy month. And if this was a golden month, even 2 trades can get me in my 3%. The thing is, what I'm trying to tell you is there's so much leverage in Forex that you need to deleverage and focus on the 3%. 3%, 3%, 3%, 3%, 3%, 3%. Okay? 3% will get you to your 50% a year, which is way better than any other fund. Okay, you understand? Okay. I used to trade one mini lot for every $100,000 in cash I had in my account. One mini lot. So right now I look at what I'm doing and I'm like, oy vey, I'm way over leveraged. Okay. So you got to be careful. 6% should be reasonable with the amount of leverage you have. You should be making 100% a year. But then I'd like you to dumb that down, because really, so a friend of mine, he runs a real estate syndication firm. They have, I forget, 500 properties, 500 apartment buildings and doctor's offices and all this kind of stuff all around the United States. And they're only promising 15% per year. And you're like, well, I make 100. They're like, 100? That's stupid. So if you walk in, you're like, I make 40% a year, 30%. I make 30% a year, but I do it every year for 5 years in a row. And if you look at my just risk-adjusted returns, they're very low. If you look at my volatility, they're very low. If you look at my Sharpe ratio, right? There's no kurtosis in my distribution. All this kind of stuff. They're like, really? Oh my God, seriously? Okay. So I'm just telling you, man, really start to think big. I'm working really hard while these markets are quiet to get you to think differently. Okay. I want you to think differently. I want you to be conservative. I want you to be disciplined. I want you to be focused. I want you to have long-term point of view, both technically, but most importantly, fundamentally. I want you to think that what you're doing is a business and that people are going to look at what you did today. And will you still behave the same if you knew 3 or 4 or 5 years ago? People are going to look at you, what you did today, and judge you. So are you trying to get rich quick? Or are you trying to build a multi-billion-dollar portfolio? Well, a multi-billion-dollar portfolio is going to require you acting like it. Maybe, okay, multi-billion-dollar portfolio. Let's make it differently. Like, how would you like to have $1 billion in turnover in a year? Okay. How about a month? Okay. How would you like to have $1 billion in rollover in a month? It's golden. But you can't do it pissing around amateur style. Okay? Yeah. Okay? Master trader, how do you get your own dealing desk at a broker? Because you do $1 million a month or $1 billion a month? Okay? Okay? Anyways, so I want you to act like that now so that you can get there. Okay? You can't be aggressive now and conservative later. It's not going to work. Humans are not capable of doing it. So we got that CAD news tomorrow. This is getting crushed, huh? This is my last stand, I guess. Boo. Where do I want to put this? There's no good place to put it. Shoot. No good place to put it. I can't see, unfortunately. Sucks. There's no good place to put it. I hate taking 50 pip trades. Hate it. See, I'm not going to take a 30 pip winner. I just can't do it. 50. This sucks. Because I want to be in this tomorrow. Do you hedge? No. No. If I need to hedge my position, I'll go to cash. Ah, crap. Son of a bitch. Oops. Son of a biatch. All right, this sucks. All right, so I'm locking in 50 pips. I'm embarrassed. Fudge. So what's happening to that? Oh, well, other things are hitting. I see we're hitting targets. And that's a laggard. I gotcha. Son of a gun. So let's go back to oil. I just want to check it. And I'm bummed out now. Yeah, well, that one I never had a lot of faith on. Yeah, okay, boom, boom, boom. All right, so yeah, everything's coming off. It's time. See, everything's at the top. I mean, it's time. So, yep, plan big, expect small. It's too bad. No, that's an exit. Okay, it's just because everything is so topish, I guess. Maybe I'm making a wrong decision. Maybe I need to sleep more. There it goes. Oh, I made 50 pips and I'm feeling crap. All right, so I'm gonna leave this one, but I'm gonna lock this one in. Hang on, I can't get in there. Son of a biatch. So I'm gonna lock in 100. And I'm trying to keep it above this. Hang on. Down, you know. See, it's so correlated. I'm not loving it. Right off the R1, which is normal for this type of month. That one's bearish. What am I sitting on now? 150 pips. Exactly. And it's on the monthly R3, M3. Ah, shit. I'm gonna cash out of it. Boo! Boo! Yeah, that's the summer doldrums. Sucks. All right, whatever. Now I'm in a bad mood. All right, well, peace on earth. May the pips be with you. May your profits be above average. Just made 200, I just made 200 pips and I feel like shit. The reason for it is I'm going to have to work again. So maybe on Monday I'm going to have to work another 8 minutes. It sucks. I'd much rather let it go, but right? So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. I'll see you tonight if you're on my live trading group. And I'll see you tomorrow otherwise here at Romper Room. And if you ever want to go line by line through a venture capital term sheet, huh? Someday.